Are you tired of earning next to nothing on your savings? Fed up with taxes? You're craving more financial control in your life? Well, you know what? Infinite banking might just be the answer for you. So in this video, I'll show you why infinite banking could be your key to maximizing your earnings, protecting your money, and breaking free from restrictive rules. Oh, and bonus, might even double your returns. So here's how. All right, so first and foremost, let's talk about infinite banking. If you haven't heard what this concept is yet, we got plenty of YouTube videos on this channel about that, playlists of infinite banking, but it's simply just this. It's a tax-free, supercharged savings account where you earn better than nothing percent, right? You want to earn more than what you get paid at the bank, which is almost nothing, right? Now, this is done with a whole life insurance policy. Whole life, unlike just term insurance where it's just death insurance, whole life, although it has a death benefit, also has this tax-free savings account inside of it. The extra cash goes into that savings account that builds up and grows. It's guaranteed to not lose money. It's guaranteed usually to make at least 2, 3, 4% per year. And on top of that, it's also paying usually much higher returns, tax-free, protected from lawsuits and creditors and all that kind of stuff, right? Now, the great thing with this is that I'm not saying this is the answer to all things, right? The truth is, I'm gonna say something that I think is not popular among infinite bankers, is that some of them will try to claim that this is the only way you should go, that this will help you get to retirement. But there's a reason why they'll often say this is like a supplemental retirement type of thing. The reason is because it doesn't work as well. It's a great way to protect your money. It's a great way to earn more than 0.nothing% in your bank account, right? But the thing with this is that it's still not gonna pay you enough to really become financially free. That's why we need other investments. And I'll talk about that in a second as we get along this line. But just wanna kind of give you a sneak peek here that this may not be the full answer, but it's sure freaking awesome if you know how to use it right. Here's another bonus too. When you're setting up an infinite banking policy, make sure it's done with the lowest costs possible. There are ways to reduce the costs that most insurance agents either one, don't know how to do, or two, they don't want to do it because it reduces their commissions. So just know that insurance agents, when they sell this kind of thing, they're offering it because they know they make money. But to do it the right way, in my opinion, and I think it's a non-negotiable, you should get the best rate of return every single time, no matter what. Doesn't matter how much you're putting in or whatever, you always get the best ones. That's at least our company's philosophy. Well, for you, I think that should be the case as well, is that you want to pay as little as possible to get as much of the return on those things as possible too. So that's just kind of key bonus for you right there. So again, you make more than 0.nothing%. Also, if you don't like paying taxes, which I sure don't, this is a great place to store it too. Like I mentioned, it's a tax-free savings account. It's not an investment account, it's a savings account. Now, the great thing with this is that it avoids taxes. Why? Well, because the IRS considers this as part of your death benefit. So they say, well, it's not really an asset because really when you die, it just goes to pay out to your family tax-free, which is true. Oh, that's another thing too. If you want money to pay your family tax-free at death, that's kind of nice. But the great thing is when you put this money in, it's kind of like a Roth IRA. You put it in with after-tax dollars, it grows tax-free and you can access it tax-free as well. The great thing is that you don't have to deal with all these dumb rules, right? Which I'll go into in a little bit here, but it's definitely more flexible than what you get with Roth. Okay. Third thing, if you want to be able to protect your money in a safe, accessible place, this is a great strategy to use. Again, if it's set up the right way, you got to make sure it's designed just right. And like I said, 99% plus of insurance agents won't know how to do this or refuse to do it this way. But you want to make it to where you have that cash that's available. So one, I mentioned, it's safe. Many people will ask about the banking failures and how that affects insurance companies. Well, the great thing is it doesn't, because insurance companies don't act like banks necessarily. Banks, when they take your money in deposits, say you have a $10,000 savings account with them, they can loan out up to $100,000. So they can have more in loans than what they actually have in cash. That's a problem, because what if people start defaulting on loans? What if something goes wrong? Or, like what we just saw happen recently, what if they go and they put their money in bonds, those things lose value, now they've already loaned out money they don't have, and they have to get liquid, they're cashing out more money than they're legally allowed to, and that's why you had bank failures happen. That's really the easy answer, right? Well, that doesn't happen to insurance companies, because insurance companies can't go out and lend money like that. They don't go and they lend out more than what they have, like banks can. Insurance companies just have the money they have, like you do, and they invest it. That's it. And usually they just put it in safe places like bonds or treasury bills and things like that, things that they know they really won't lose much money on, if at all. So they're making money there. But even if they could fail, which some of them have in history, like the Great Depression, 2/3 of banks failed, but only about a few insurance companies actually did fail during that period of time. Well, the great thing is insurance companies are legally bound to be able to buy what's called reinsurance. So they pay insurance premiums on themselves. So if they ever go out of business, reinsurance companies, which are global insurance companies, will come in and step in to protect your death benefit and that cash value, that savings account that's in there. They protect it. Way better than the FDIC, who only has less than 2% of all bank savings that's available. If we have 10% of banks fail, you might be waiting some time to get your money from the government because there's just not enough, because the FDIC doesn't have that much money. So what I see here is that it's way more safe and better returning to have my money inside my life insurance policy than keeping it in the bank. And the great thing is I can get to that money within days. I may not be able to walk into a bank and get it overnight, but usually I can get that money within days. Oh, here's a bonus tip. What I do for myself when I want to save my money for my emergency fund that's just sitting in cash, I keep a little bit in the bank that I can go into today to get, but then I keep the vast bulk of my money inside my life insurance that can be accessed usually within a week. So I keep most of my money there, it's protected, earning better returns, but I keep a little bit in the bank just for that overnight or that same day money that I need to get to. So that's how I use my money there. Now, I mentioned this one before, but you don't have all these dumb rules. Like you don't have to wait till you're 59 and a half to get to that money, right? Or it's not like a 529 plan where you can only use it for college and nothing else, right? No, you don't have those dumb rules. You don't even have 10% penalties and all this other kind of dumb stuff and hoops you have to jump through. It's pretty dang simple. It's really like a savings account. But it's not like you walk into a bank and get it. It's not that easy. You go online to get access to that money usually. But it does take time to transfer to your bank and things like that. I see it very similar to having a high yield savings account you might get through another online banking system, and then you transfer that money over. Very, very similar in that way. But the great thing is, I don't have to wait. So I can use that money today. In fact, the way we design those policies, we actually allow it to where after 30 days, you can get to that money and use that money to go and invest or do whatever you want. And that leads to my final point, is that you want your investment or your business savings to pay you twice. Now you're probably wondering, like, how does that even work? How do I get to pay me twice? And I don't have lots of videos on infinite banking. You can go in deeper into that, but here's the simple answer, is that you've got this savings account here. Because it's making you at least 3% plus a year, right? And that's just the guaranteed side. Most of these are paying 5 or 6% a year right now. Well, just because you're earning that money, insurance companies know that it's not gonna lose. They know that you've got it there. So as a result, either the insurance company or even a bank in some cases will lend you money based on the money that's in there. It's called a secured line of credit or a collateralized line of credit, where they basically say, well, you have the cash in here in this account that's collateral. We'll give you a loan, a line of credit, where you can access our cash. We just lock up the cash that's in here. You get the cash from us. And you might say, wait, Chris, I wouldn't want to pay for my own money. That's ridiculous. And normally I would say that's true. But what it allows you to do though is that they're still paying you money in here. Now you could withdraw money from your life insurance. That's possible. You can withdraw it like any savings account. But the reason why I don't want to, because I can get that line of credit from another bank or from the insurance company directly. I can pay it back whenever I want. There's no monthly payment on this money. So yes, they're charging me interest, but I'm also earning interest from the insurance company. They're paying me on all that money. So say you have $100,000 in there that you've built up, you want to borrow $50,000, you don't take it out of that account. The full $100,000 is still making tax-free dividends of like 5 or 6%, while on the other side, you might be paying roughly about the same interest, but you're paying a simple interest versus the compounding interest that you're making. So you actually pay less in interest to the bank or to the insurance company than what you're earning on it. So you make money here, but then you can still take that money, use it to go buy real estate. You can go invest. You can blow it in Vegas. Don't recommend that. You could go and use it to, put in your business to make you more money there, and actually make tons more money in how you use it. Now, again, like I said, I'm not going to go into a lot of details of the how-to. I have other videos on that, but it's just simply this. You're making money while it's inside the insurance, but also that line of credit you're able to use to invest, make money here. You actually make money in two places at once. It's pretty dang awesome. And that's why it's something that's flexible. It can be used really to your creativity. And that's what's so hard for people sometimes to grasp it, is that it's not because it's hard to use. It's not at all. It's because you can use it in so many different ways because they don't give you all these guardrails like you do with dumb retirement accounts that make you take all these rules where you only have like one path. Here you have multiple paths, multiple flexibility, just like any other savings account, but you get the added benefit that you can actually make money twice on that money and make a better return. So anyways, if you think this is great, guys, please, like and subscribe to our channel. And hey, keep going down the rabbit hole here. Check out our next video series that we have about why is the answer.